Hi, I'm Sharon Winsmith, a tax attorney, active investor, and your go-to resource for proven investment and tax planning strategies. In this video, we're going to talk about some tips you can use to avoid having a margin call on your SBLOC. So as a reminder, SBLOCs are securities-backed or securities-based line of credit. That is when you borrow against your portfolio of stocks and bonds. So I personally like this strategy as a great way to implement the buy, borrow, die tax planning strategy. But as with everything that comes with investing, yes, there are some risks with SBLOCs. And probably the biggest risk with an SBLOC is having a margin call. So let's talk about what a margin call is and how you can use some strategies to avoid having a margin call in the future. So I'm not going to spend a lot of time in diving into what exactly a margin call is and how it works with SBLOCs. I have a video I'll link to below where I explain how margin calls work for SBLOCs. This is something that I think is very confused out there. You don't see a lot of people talking about this correctly, but it's important that if you're going to do an SBLOC that you understand what a margin call is and when you could have a margin call. But just as a quick refresher, yes, SBLOCs, with an SBLOC, you are borrowing, you are taking out a loan, so to speak, from your broker with your portfolio of stocks and bonds as collateral on that loan. So you're going to have a margin call when your portfolio drops below the broker's margin requirements. So that's, important that you understand that. Every broker has different requirements. Here, usually it's the maintenance margin, which is, an important threshold when you're talking about having a margin call. Usually that's going to be 25%, but some cases that can be a lot higher. So you could actually have, a margin call a lot more quickly if you do have, higher maintenance margin requirements. So check out my video on how margin calls work, where I dive into that in more detail and I walk you through an example of how that could look like in practice. So what happens, just, really quickly, what happens when you have a margin call? Some brokers are going to just start selling your shares. So that's really bad. You're going to have, significant taxable gains in most cases. You're also not going to have any control over what gets sold. In a lot of cases, the broker's not even going to give you a heads up. If you have a margin call, it's bam, they're going to start selling your shares. So that is, something that you need to be aware of, and that can be very bad, right, for a number of reasons. So you want to avoid that. One thing I do want to mention is, yes, SBLOCs can have some risk with them. Yes, the market can drop a lot. Yes, you can have a margin call. There is margin call risk with SBLOCs. I am not trying to say there is not, but a margin call is not the end of the world. And also a margin call should not prevent you, or the risk of a margin call should not prevent you from using a very great tax or an investment planning strategy if that strategy makes sense for you. So don't be scared of SBLOCs because of all these people saying the market could drop, and you could have a margin call and make it sound like the zombies are going to come and take over the world. In that case, it is not the end of the world. And there are ways to avoid margin calls. So that's what we're going to talk about what are some tips and strategies of how you can avoid having a margin call. So I have used SBLOCs for a very long time. I have been invested for a very long time. I have never had a margin call. That's not to say it can't happen to you. I know a lot of people. I know a lot of very smart people who have had margin calls. So, people have done it and lived to tell the tale. It's not the end of the world, but you don't want a margin call. I'm not trying to sugarcoat this. You do not want to have a margin call on your SBLOC. It can get very messy. And yes, we know the stock market goes down. We know one thing I don't bet on anything. I'm just not a gambler. I would bet a lot of money at some point the stock market will go down. We just saw it happen with COVID. There was a huge dip, a lot of margin calls. You can read in the news how people got themselves in a lot of trouble. I've been invested for a very long time. I've weathered some very big downturns from 2008 to COVID. I have never had a margin call, largely because of these 6 strategies that, you also should think about how you could use these as well in case you get close to a margin call. So the first tip I'm going to say is just understand what you are doing. People say SBLOCs are so risky. They are if you don't know what you're doing. So if you're someone who's going to go out there, buy, $100,000 of stock and maybe some, company, like do stock picking or maybe small caps, whatever it is, and then just immediately take out, 50 grand of cash against that. That is not a smart way to use SBLOCs, right? There's smart ways and there's really not smart ways to do this strategy. But you need to understand what you're doing. You are not trading on margin. I see a lot of people leave comments on my videos or make statements about this is so risky, but what they're talking about is trading on margin, which is something I would never do. So I'm not talking about going out and using leverage to buy stock, so I'm not talking about when you don't have money using, leverage from a broker to buy shares. I'm talking about you already own the shares and you're going to take a loan against those shares with those shares as collateral on the loan. So that is an SBLOC. I am not talking about, trading on margin, which is something I would absolutely never do. So understand what you're doing from making sure you're understanding that this is a loan. This is a loan from a broker. Your shares of stock or bonds or whatever are collateral on that loan. So you need to think of it that way, right? If my stock value drops too low, then I don't have sufficient collateral, because that's really what a margin call with an SBLOC is. It means the bank doesn't think I have sufficient collateral to support the loan and they're getting nervous. So they're going to start selling my shares to get me back above their margin requirements. So understand what you're doing. Never do everything is risky if you don't know what you're doing, right? But if you educate yourself, know what you're doing, understand the strategy, your goals and objectives, understand that you are not trading on margin, that is something very different, then you can, that's the best way to start as far as managing the risk. Also, be conservative in value in your portfolio. I wouldn't take a 50% SBLOC. I'll talk about that in number 3, but I'm not looking at the value of my portfolio when it's clearly inflated or at all-time highs. The market has been doing pretty well lately at the time of recording this. I'm not necessarily looking at the value of my portfolio when the S&P 500 hits its, new high and saying, oh, my SBLOC is 50% of that. Look at reasonable times, look at averages over the past years or so. Obviously, I'm not looking at the value of my portfolio when it was down because of COVID. I'm looking at just a normal, based on the past few years, what is a normal average value of my portfolio? So don't get greedy, right? Don't go out and say, oh my gosh, the stock market went up, a ton and I can take 50% of that. So I'm going to borrow that now, because you're going to turn around and have a margin call when the stock market comes back to reality. That's just the way it works. Also, that goes good in conjunction with tip number 3, which is never borrow up to the max. So a lot of places, a lot of brokers let you borrow 50%. So if you have $1 million of stock, you could borrow up to 500,000. Some places let you go higher. I am never going up to the max, and I consider the max to be 50%. If it let me borrow more, I'm not going up to 50 because they let me borrow more. I stay around 40% at most. So, an SBLOC is a good way, it's a good kind of, think of it as a line of credit, right? Like a HELOC, it's very flexible. It's a very good, easy access to a lot of cash. If you haven't taken my buy, borrow, die tax strategy course, I share how I use SBLOCs and how I kind of use it to float when I need cash to make other investments and how I do that. But best practice, in my opinion, is to stay below 40% at most. If you're going to be someone who goes out there and just takes 50% of the cash out of your stock portfolio to do God knows what with it, that is not a smart way to use this strategy at all. And you're going to get yourself in trouble, right? If you're too greedy, you're going to have a margin call and it's just going to be a nightmare. But stay low. Don't go up to the max. Leave yourself a little cushion. And then, that's just an extra layer of protection that you have against a margin call. So don't get too greedy. That's important. Number 4 is we know the stock market is going to drop. We know that, right? It would be crazy if the stock market just never dipped. We know there's going to be some significant drops. At some point we're going to have another recession. That's just kind of the way, that's just the way it works, right? Just basic economics. We know at some point the market's going to go down. That history has shown us that. So have a plan in place. What am I going to do when that happens? So I never have 100% of my securities or cash. I don't hold a lot of cash, but I never have 100% of my, liquid assets in the portfolio where I'm doing my SBLOC. So I've got multiple brokerage accounts and I've got one account where it's my SBLOC account. So if I started to see the market drop, I could transfer a bunch of securities into that SBLOC account. And I could, bolster up my collateral so I'm, less likely to have a margin call when the market drops. Also, if you are someone who holds cash, I hate cash. I'm a big cash is trash person. If that's the case, then, transfer cash in, pay down. That's going to immediately pay down your SBLOC balance. So you're going to see your SBLOC balance decrease, once you do that, or the negative cash value in your account do that. But that's going to bolster up, you're going to be in a better situation when it comes to the margin requirements. And, just having access to some liquidity, whether it's extra shares, bonds, whatever is your cup of tea, have a plan where it's like, okay, I start to see the markets going down. This doesn't look good. Let me just get that in there. It does take some time. It's not instantaneous. Usually sometimes cash can be quicker, obviously. So there does take some time for me to transfer my securities between account to account. It might be worth giving your broker a heads up. I'm not saying they're going to agree to that. IBKR has been a little bit ruthless in the past as far as, they'll just sell your shares. They just, they're pretty ruthless when it comes to margin call. They don't play around with that, but give them a call. It can't hurt, right? To ask and say, hey, I've got some securities on the way. But usually the market doesn't just completely tank in one day. Usually it's kind of a couple days or weeks before, we start to see things fall off a cliff. So, again, start doing that immediately. Get those securities or that cash or whatever your plan is placed. It's time, like once you start to see the market go down and things aren't looking good, it's time to, activate that plan. And that way you're not caught off guard. So always plan. I'm a big planner. I'm never someone who likes to have surprises. It shouldn't be surprising for the market to drop, right? If you understand stock, and you shouldn't invest in the stock market if you don't understand it. And if you understand it, it's going to drop. So it shouldn't be a surprise to you. Shouldn't be caught off guard. You should have a plan. And the minute you see that start happening, activate that plan. Number 5, this should be common sense, but never invest that SBLOC money into correlated assets. So for example, this kind of goes back to trading on margin. I've seen people say, take an SBLOC and then just invest that right back into the stock market. So some places let you do that. So, I always use the term SBLOC, meaning securities backed line of credit. That term, in my mind, it can be interchangeable with things like a margin loan. I'm not talking about trading on margin, but a margin loan, there's different terminology for that. For example, I don't think IBKR calls it an SBLOC. I think they, refer to it as margin lending. But that just is the difference is how you can use the cash. So while some brokers may let you, borrow 50% of your portfolio value and take that in cash and then immediately buy more shares in that same portfolio with that cash, I'm not doing that, right? That's basically trading on margin in some respects. And it's also just not smart, right? So I like to do the double dip approach where I use an SBLOC and then invest in a secondary asset. That secondary asset is going to be as uncorrelated to the stock market as I can make it. So I might take an SBLOC and invest in real estate or invest in private equity, which I think is very different than public shares. Invest in things like venture capital, invest in things like crypto. I mean, whatever, is your cup of tea as far as what you want to invest in, then just make sure it's not correlated. I'm not borrowing against Apple shares to invest in, Tesla, for example. Not that those are necessarily correlated companies, but anything that's, the stock market just always seems to trade a lot. When you talk about, highs and lows, you're talking about, public sentiment there, market sentiment. So I'm not in touching that money as far as putting that money back into the stock market. I think that's very risky. I think that's very dangerous. And I think that's just a really bad way to use this strategy. Number 6 is that if all else fails, if you just realize, okay, I've activated my plan, I've transferred over what I can, and just crap, I'm going to have a margin call. There's just nothing I can do about it. Here we go. Start to sell the shares yourself. If go ahead and give the broker a call. It doesn't hurt. Say, hey, can you guys give me some leeway here? As far as this, they're probably going to say no, in most cases, but can't hurt to give them a call. If they say no, then say, okay, then I need to start having control over what shares I want to sell. If I'm going to have taxable gains, I want to make sure, those are long-term taxable gains. I'm not triggering short-term taxable gains because that's taxed at a higher rate. And I want to just sell shares that, if you've got different shares of stock, I like to do SBLOCs on S&P 500 index funds because I don't really do stock picking. I don't think it's very smart. But if you do have different stock, maybe be smart about which ones you sell, right? There might be some reason why, let's say, it's the COVID dip and you're thinking, oh gosh, I'm going to have a margin call. I don't know if I want to sell my shares of Delta or, Royal Caribbean or that type of thing. If I'm someone who, did stock picking, because those are at their absolute lowest, right? Those stocks just got hammered. Those are the big stocks that pulled down the S&P 500 averages even lower because nobody can cruise, right? Nobody can fly. Nobody can go anywhere. So, I wouldn't want to sell those shares. I might be okay selling some shares that have a little bit less of a dip. But, Delta, Royal Caribbean, I'm not saying invest in those, I wouldn't, but, those are going to skyrocket, right, when the world opened back up and people could travel again. So those are actually shares that I would probably be buying at that point if I were doing stock picking and not selling. So you want to have control. That's the point. I'm not telling you what to sell and when to sell. I'm saying you want to have control. You want to make sure you're selling the shares. If you have to sell them, that's going to give you the best tax result. And that's just the smartest investment decision. So, there's going to be shares that are, if you've got different shares within your portfolio or, or bonds, whatever, you want to be smart about what you're selling and what you're not. And you want to have control over that rather than the broker just coming in and selling whatever they want. So hopefully this was helpful. This is just some good tips that I've used in the past that have helped me avoid a margin call. I think that, SBLOCs are great strategies if you know what you're doing and you understand the risk. Yes, there are some risk, and yes, a margin call is a risk with an SBLOC. It's a very real possibility, but you need to be smart and you need to have some ideas and plans in place to make sure you can avoid a margin call and getting yourself into trouble in the future. So hopefully you found this video helpful. If you did, please like the video and subscribe to the channel.